Welcome back, everyone, to our chat on personal finance. Today, we're really diving into the debate between real estate and the stock market, talking about returns, risks, and the effort involved. Yeah, absolutely. So, when we talk about real estate, we're talking tangible assets, properties you can live in, rent out, or even remodel for extra value, right? Yep, exactly. And stocks, on the other hand, are, well, digital shares in companies. They don't let you touch them, but they do offer compound growth, historically around 7 to 10% annual returns after inflation. And that's pretty impressive, especially when you think about how stocks work in the long run. But real estate has that extra element of rental income and leveraging with mortgages, doesn't it? Right. Yes, yeah. It's like using a lever to boost your gains. Even though on average the U.S. housing market shows around 3 to 5% annual appreciation, your returns can jump up high if you have the right leverage strategy. Exactly. But here's a thought. Stocks are known to be more consistent over decades, while real estate can sometimes have dramatic booms or crashes, like what we saw in the 2000s. Would you agree? Definitely. For sure. Stocks are liquid, meaning you can sell quickly if a recession hits, although that volatility can lead to overnight drops. Real estate, though, is less volatile day to day, but can trap you during downturns since properties take ages to sell. Yeah, that's a solid point. And what about the effort involved? I mean, stocks are pretty much a set it and forget it kind of deal, right? Indeed. Absolutely. You just buy an index fund and check it occasionally. Real estate, though, demands a lot more hands-on management, finding properties, dealing with tenants, even handling those unexpected repairs like a sudden $5,000 roof fix. Ignored. Now, I do wonder, though. Many say that with real estate you have more control, like reno options or raising rent, which stocks don't allow. Isn't that sort of a big advantage for property investment? It is, but sure, there's an appeal in being able to call the shots when you own a property. You can literally mold the asset to your advantage. But I'd like to challenge that a bit. Control also means extra work, and if you're not in it for the hands-on process, stocks might really win the race for passive, steady growth. That's a fair critique. It really depends on your personal style. So if we bring it all together, what does that mean for long-term investors? Well, it means diversification might be key. Right on. Data even shows that many millionaires have a mix, about 25% in real estate and 50% in stocks or business equity. The idea being you get both stability and growth from different sources. Absolutely. Diversification is like having your cake and eating it too. In essence, if you're starting out or just want the simplicity, stocks are a great choice. But for those who have the time, cash, and maybe even a passion for managing things, real estate can deliver bigger swings if played right. So, team stocks for those after a nearly hands-off steady ride, and team real estate for the go-getters who love taking control of their investments. Honestly, why not do both? That way you get the best of both worlds. Yeah, really smart approach. And that, folks, really breaks down the debate quite well, doesn't it? It's all about finding what fits your risk tolerance and investment style. Absolutely, could not agree more. I mean, it's like choosing between driving a sports car for thrill or a sedan for smooth, consistent driving. Both can get you there. It just depends on your journey. That's a neat analogy. Before we wrap up, any final thoughts? Just to remind everyone, whichever path you choose, remember to be informed, plan for the long game, and always keep diversifying. Right on. Exactly. And for more insights on building wealth, keep exploring, stay curious, and don't hesitate to mix things up according to your goals. Totally. Thanks for joining this mind-opening conversation. Until next time, keep questioning and keep stacking that cash. Absolutely. Catch you later.